Hi folks, and welcome to the Pipnotic Symposium for the 9th of June 2021. Today we're going to analyze the SP 500. We're going to use a lot of the theory, the protocol that we discussed and utilized during the live webinars at daytrader.dk. So if you haven't seen those, then I encourage you to go back and watch those, and maybe what we're talking about today will make a little bit more sense to you. But if we take the macro view of the SP 500, you can see that this is headed for the moon. It almost looks like a crypto startup, that it keeps going up and up and up and up and up. And so there's a lot of, I don't know, it's due to the fact that we have a quote-unquote global pandemic on our hands, and we should be seeing much more bloodshed. The stock market seems to be surviving, which makes me a little bit curious as to why this is happening. Of course, in the US they have the Fed, who are printing unimaginable amounts of money, and with some of this money they're supporting the stock market. So this could also be the reason, or one of the many reasons, that the stock market continues to climb higher. But no matter what is causing the price of this to continue higher, the fact is that it is continuing to move higher. So let's look at this with a long perspective and try and find some areas that we would entertain for buying the S&P 500. Okay, so as you can see here, we had weekly supply here. This was removed by something in here. Okay, and you can see that the big move that continued moving beyond this high originated from these lows here. How price, we formed this area here, price came up, we tested it once, we tested it twice, we had huge rejection, and price just continued more or less pretty efficiently to crawl higher from here. So there's something in here that's interesting, because it's from this price point the price was able to move above these highs, and this is where we saw the first big sell-off back in 2020. Okay, so let's mark that off. Let's mark off the lows. We'll take this one here and we'll put it just there, and we'll jump down to the smaller time frame just to have a look and see what that looks like. Okay, and so this is where we had it. We had this here. It was removed by this little price nodule. Price went up, we came down, we had a kind of a complex pullback. We have which is essentially a deeper pullback, like a lower low into this area of demand. We challenged this high, so let's mark that off, because this is important, because price did not move through it, which is telling us that we had, let me zoom in a little, we had significant selling pressure at this point to cause price again to move to the opposite side of the market, and then price finally managed to move through it. And this here looks like buying at spot prices, where people weren't necessarily waiting for a pullback, they were just getting in. And so if you consider that for a second, I mean, who would just buy at whatever price possible? I mean, there can be several participants that would do this. Number one is someone who has an enormous amount of money, and somebody who is keen on supporting the stock market, and that would be some kind of a huge institution like the Federal Reserve, for example. And so that means they're not waiting for pullbacks, or at least price did not pull back very much. It continued to wriggle higher like so. No big pullbacks, tiny pullbacks here, but there's nothing like this or like this. Okay, so price continues to pull higher. Okay, so I mean, if you look at this, I mean, this is where that pullback started. So we had the slingshot was pulled back, we tested, we went to the opposite side, let's pull back to this. This is the child, this is the parent, which is not a parent. This is an older sibling, because we have a lot of nested areas within this price structure. And again, if parents and children don't make sense, then go back and watch the day trader webinars that we've done. And so now price is continuing to wriggle higher, and we do have several areas. We do have some highs and some lows that have been removed, and so we want to find out where the origins of these are. And I can see one now that just leaps out at me just by looking at this chart, and that is this one here. And the reason this is interesting is because here we had some higher prices. Let me zoom out. We had a test, a failure, a test failure. We had a complex once again. We came down, we formed the space, we rallied, we accumulated. So we tested this area. We had 3 days accumulating just below that area. When you see something like this is important to pay attention to, because this is where we have major flows moving into an asset. And you can see that because we had these, let's zoom in so we can see the candles properly. You can see that we had big rejection down here, we had kind of uncertainty, and then we started to see these bigger bodied candles where we had the wicks below, and we started to see the lows increasing. So this is telling us that we have pressure that's building up below price. We can anticipate that it's going to pop through this level of resistance here, and this is where it happened. So this would be an interesting level just here for that reason. So we know that we onboarded a lot of buyers from around this price point here. So this is a very interesting price window. That's quite small for my 45-year-old eyes. What's that? 39.81. This is a very interesting area. So I would certainly watch that quite carefully. We do have the beginning of the buy zone, which is here. The price has not managed to come back to here since the buy zone. And so since this area of demand was established, we have black space from the departure candle, departure bar. So this is fresh, untested demand. So this would be a very interesting area to look to buy. We have some other stuff going on up here. So let's go to the 4-hour chart and look at that. I'm going to zoom out just a little so we can see. Okay, so now we need to find these areas of supply and demand that are responsible for consuming opposing supply and demand. Okay, so if we focus on bleeding edge price, which is the last 300 candles or so, how many do we have? Yeah, I can't see if that's 200 or 300, but a few. And you want to focus on these turning points. Okay, so you can see that we had a big turning point right here, and you know we have a bullish bias, so we're not interested in selling. We want to only buy, and we want to pay attention to these major turning points. We have one here. Okay, so this is where price turned around. So we had something in here. Okay, it was tested once, twice, 3 times, and then price managed to move through it, and then we came back. Okay, so the origin of the move that caused price to move beyond it is below these lows here, because this is where price managed to hold and trade above it. Okay, and we have that down here. The software found it nicely for us. We've got a 4-hour nested area, which is this dotted box just here, and we have a daily area just here below price. Okay, so the 4-hour area was tested. So what we do, let's just move this away here, and we'll move this down to here. Okay, and here we have a rally, accumulation rally, so we have kind of a continuation pattern here, just here at the edge. Okay, and this is the one that's responsible for price moving beyond this. We can't see the details of this on this 4-hour chart, but we can assume that we have probably hourly or half an hour supply in here, because this is where price turned. And just for the sake of example, we are going to have a look at that on the smaller time frame. So I'm just going to let that update and manage my rectangle, and then we're going to click on to the half-an-hour chart, and we're going to find that area and see what it looks like. And as the saying goes, I'll eat my hat if we don't have an area. And we do have an area. We have it right here. We actually have something that I would do like this. This is where the slingshot was pullback departure. So we go back and we look, test, 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 removal. Okay, so the area that removed that, we traded through it. We didn't quite manage to get all the way through it. This is where we managed to where are we? Sorry. See, we're kind of fiddling around in the area, and this is where we saw some commitment moving through it. Okay, so the origin of the move that started this whole push higher, we also had our upward sloping trend lines like here, so you can see that prices is supported. The origin of it is here, and this is a strong move. You can see here that we had a pullback in price to this accumulation. Price rallied, accumulated, rallied, accumulated, rallied. So the slingshot is actually the low. I would actually go as far as to say that this area here is the one that's interesting, because this is, if we zoom in, you can see the pattern much clearer. Maybe one more time. Okay, so we have this price left. We had something in here, tested. This one went through it, the slingshot was pulled back, and then we left. So this is an area that would be interesting. We had this one area just below, sorry, just above it, which was removed. So this one is now gone, so we'll remove it. Scroll. We had this one here, as you can see. That's gone. We scroll over, and we have this. So we tested that area, and we left. We had a really huge influx of buying pressure from this price point. We actually had a 30-minute demand. Let me remove this one that we drew. We had a 30-minute demand, and this is actually where price went from. So we'll remove the one we drew, and we'll leave the one that was drawn by the software. We poked into it, and then we left. We really left. I mean, that's very strong. Okay, so now what do we have? Well, where do we have something similar? Okay, where we had price move to an area and then retreat and then later consume. What we had this 4-hour area here. Price went through it. We came back down. We moved through it. We removed it with something in here. This was an important area. Why? Because we tested it and we failed to move through it, and then we cut through it like a hot knife through butter. So where is the area that's most interesting to us? Well, the area that's most interesting to us is down here. It's going to mark off the whole area. Before I do that, I just want to show you something that's important. Notice all these tests, rejection, tests, rejection. Okay, now we see the muscles being flexed, the shirts being torn away, rally, commitment, boom, boom, and then a huge pop. So this right here, and likely from the high of the candle, but I wouldn't do that. I'll take the low of the departure candle. So the low from here to around here. This is where we will very likely see price react. Okay, we've established the buy zone, which is really good. So you can see the price came down here, but we failed to move beyond that. And so this is giving me enormous confidence in the price. If price manages to come below here, that we'll see buyers re-enter the market. This is a really nice area here. It is a 30-minute area, so it has less clout than, let's say, a daily or a 4-hour area. But intraday, you could certainly trade that, I think, in a way that would result in some profits if you managed it a little bit carefully. So we have that, and looking here on this time frame, let's actually go to the 4 hours so we have more important data. So now we have this macro area that's brought to our attention, which is here. I'm just going to move it just over here so you can see, and you can see very clearly that this is the candle to the left. We moved above this high. This is the origin of it all. So I'm thinking when price manages to come back to anywhere in here, I would move my stop a little bit wider. I think this would be a very interesting place to begin to entertain the idea of buying the SP 500. Okay, good. Well, I'm gonna, before I finish, and where would we hold it? Where would we get out of the trade? Well, you know what, this is a really difficult question to ask because we've never been to these price levels, and so this is a very difficult question to ask. And so initially set a risk reward of risking 1 for the potential to win maybe 3 times that. That would be great. Or what you could do, you could also remove your target, leave your stop in obviously, and just trail your stop. And using the same methodology, you would obviously, let's just do a quick run through some very quick theory here. Price doesn't just go up like that. It's impossible. It can't just go up and never look back. It has to move higher. We have to advertise cheaper prices that will encourage people to buy. They get a little bit excited, not excited enough, ooh, very excited, and price does this, tests this, and then moves high. So you want to pay attention to the behavior of price as it continues to wriggle higher. Okay, you want to focus on the areas where we had a significant high. That could be, for example, this high here. Okay, and then if price manages to move down here and move through it, well, then you want to focus on the area of demand that removed this supply and put your stop below that, because this will present a challenge should price decide to come back down and attempt to move lower. Okay, this will give us protection for our stop. Just dragging it below price as price moves higher or lower as price moves lower, it doesn't really make much sense. But doing it this way, where you're focusing exclusively on the anatomy of price and liquidity distribution patterns, will help, will number one, ensure that you have protection for your position, and number two, enable you to place your stop where price is very unlikely to go. And if it does get there, then you no longer want to be in the trade anyway. Okay, good. Well, I'm going to leave it at that. If you have any questions, let us know, and have a lovely day.